In this video, we will analyze Shopify and review its latest Q4 report. Before we proceed, I would like to mention that the purpose of this video is not to give investment advice, but simply to provide information, change your perspective on investing, and introduce you to new opportunities. Always make sure to invest based on your own risk analysis, strategy, and interests. As we all know, Shopify is one of the largest e-commerce platforms in the world. It primarily helps small and medium-sized businesses, SMBs, create, manage, and grow their online stores. In other words, unlike marketplaces like Amazon and eBay, Shopify offers a platform for people to build their own personal stores. Currently, the company has a total market value of $155 billion, a plus 126% growth over the last 5 years, and a plus 13% increase in its year-to-date YTD performance. Now, let's look at Shopify's latest financial performance and explain what these numbers mean. In the last quarter, Shopify increased its net income by plus 97% and total revenue by plus 31.2%. These are outstanding figures. Generally, when we talk about net income, we refer to the real profit the company has after deducting all expenses, salaries, taxes, advertising, etc. This shows that Shopify is managing its expenses efficiently, earning more, and also demonstrating that the company can finance itself and needs less debt. Moreover, this is a very positive signal for investors, as the increase in net income indicates that the company is becoming more profitable. The plus 31.2% increase in total revenue also proves that the company is attracting more customers. The e-commerce sector is still growing, and Shopify remains a major player in this sector. Additionally, Shopify earns revenue from both its subscription system and commissions from merchants. In the last quarter, subscription revenue increased by plus 27%, while merchant revenue, commissions from sellers, grew by plus 32.6%. Furthermore, there was a plus 25.7% increase in gross merchandise volume (GMV) and a plus 32% increase in gross payment volume (GPV). These numbers show that the company is continuing to show significant growth in both revenue and user base. A quick reminder before we continue: if you want to discover new companies, learn about them, stay updated on their analyses and fundamentals, and deepen your knowledge of investments while having fun, please make sure to like this video, subscribe to the channel, and turn on notifications for the next video. At the end of this video, I will explain how you can receive up to $30 worth of free cryptocurrency and stock shares, so make sure to watch until the end. Now, let's continue. As we continue, I want to talk a little about the company's margins. In the last quarter, the company's gross margin was 48%, EBIT margin was 16.5%, net margin was 46%, and free cash flow margin (FCF margin) showed a plus 22% increase. These figures indicate that Shopify is able to convert a high percentage of its revenue into profit. The 46% net margin is particularly strong. For 2026, analysts expect the company's revenue CAGR (compound annual growth rate) to be plus 22.8%, EPS CAGR (earnings per share) to grow by plus 30%, and FCF CAGR to increase by plus 28%. These forecasts suggest that Shopify will continue to grow rapidly in the future. I believe the plus 30% growth in EPS is a very positive sign for investors. Looking at Shopify's valuation, we see that the current P/E ratio is 113 and the expected P/E ratio for 2027 is 54. A P/E of 113 is very high, which means that Shopify is currently overvalued. However, the P/E is expected to drop to 54 by 2027, which is due to the increasing profits. Currently, the price of one share is around $121, which aligns perfectly with the analyst's average price prediction. Analysts predict that the price of Shopify shares over the next year will range between $68, the lowest, and $145, the highest, with $121 being the standard. When talking about Shopify's strengths, we must focus on several key points. First, the company's cross-sell strategy is very powerful, meaning it can offer and sell various services alongside its main offerings, which they have developed significantly. Moreover, Shopify continues to expand its ecosystem and successfully retain sellers on its platform. Another advantage is the company's ongoing efforts to expand its global market presence. Finally, it is important to remember that the overall e-commerce sector is still growing, which is a positive development. To summarize, Shopify continues to strongly increase both its revenue and profit. While it may appear overvalued at the moment, its long-term potential is high. Despite the current share price of $121, analysts expect it to go even higher. I hope I've been able to explain the company's financials in detail. Lastly, as I mentioned at the beginning of the video, if you want to get free cryptocurrency or stock shares worth up to $30, you can register on the Quantfury platform using the link provided in the description, where you can buy and sell the stocks you want. Quantfury gives free cryptocurrency or stocks to everyone who registers. To claim this gift, make sure to use the invite code I mentioned in the description when signing up. If this video has changed your perspective on investing even a little, don't forget to subscribe to the channel, turn on notifications, and stay updated with my future videos. Take care of yourself, and always remember that the $100 investment you make today could make your life 100 times better in 10 years.